All right. Good morning, everyone that is here. You're welcome. We'll just wait for others to join us quickly, and then we will get started as soon as we have reasonable number of a minimum of 10 people. All right. Um, guys are welcome. This is Trader Sipran here. We're going to get started quickly. So if you want to share the link, you can share the link to as many people you know who is interested in trading. This is the public holiday in the United Kingdom, or we call it bank holiday. It is bank holiday here. So we're going to be looking at a few things, and hopefully we might look at trade if there is any, and we'll talk about a few things that is needed in your trading journey. If you haven't watched my weekly forecast for this week 22, I encourage you to watch the video. The video is on the YouTube section. You'll find it there. I'll encourage you to go watch it because it will help you understand what we're looking at this week on three major pairs that I talked about. Three pairs, actually, GDP USD, Euro USD, and FSP 500. One indices. Okay, now we can see that price is actually rejecting at this key level that we marked out on the daily. And if you look at the daily, it's a bullish trend. On the daily, we can look at the market is bullish because we see that this structure has been taken out. Yeah. And now we have price rally up. Yeah. And then came back down here and then smashed up to take out this high. So we have a new high breaking this structure, which means that we have a new structural high of a bullish trend. So we still expect that British pounds, USD will go bullish. That is what we're looking at. We expect it to go bullish. We already see that this trend line has been broken. All right. So that trend line has been broken. This is chart analysis. The trend line has been broken right here, or probably right there. So, and because of that, We want to be able to understand how to now get in the position as a day trader. Intraday strategy, intraday trading strategy. That means trading within the day, get out of the market. We are bullish, and on the 4 hour, we are also bullish on the 4 hour. But right now, the market is, sorry about that. Right now, the market is consolidating here. And that consolidation is not a big deal. It is something that we can literally understand why it's doing so. Firstly, we need to understand what the market did here. If I turn this to high candle candle, you will see that based on the body, this move already took out this body structures here. Let me just put it there. This one, based on the body. The wick is stronger. We have the wick up. So candle still, we have the wick up. But the body, we have it here. So that's why that place is an interesting area of the market. It's an interesting area of the market on GU. It's an interesting area of the market. So the first thing we want to do is, how long will the market want to stay here, and what will it do next? Well, it's a bullish market. It's still bullish. We want to look at that the market will break that high and come back and touch this high as predicted from the weekly time frame. We check the weekly, the notice we're targeting this high. We go to the monthly, you will notice that was a week, and we have a body here, we have a week. So I'd rather use the body on the weekly as a target, not the week. Now there's a higher high here too. Another strong high over here. Body. And that will be priced at 1.3100. So that's 1.3100 at that level. Just to be precise. So on that levels, we can tell that on the weekly, the market is obviously creating a new structure, because we can see that the market created a momentum to the downside and then pushed up, came back down, pushed up again, came back down, and now it's pushing up. So this is exactly what we're looking at. So that's why we're targeting this high as equal high on the lower time frame for our trade. So if we were to look at the pips from here where price is at to that high, that's about 115 pips. So this week, there's possibility that we can get 115 pips on GU this week. So let's go to the daily and it will be clearer. So what we need now is a pullback, and the market is struggling. All right, the market want to pull back, but it's struggling. You want to go higher. So if you look at the daily, you will notice that there is a potential high here as well. So that can be the trade number one target that we're looking at today. So this imbalance needs to be taken out. This high structure, if the market is bullish, needs to be taken out. So we need to now go to the 4 hour and look at the behavior of the candle. We can see that the price action here is liquidity. We have liquidity here, which also price is rejecting at 1.27500 psychological level. And all we need to see is that the market break above there, or it pull back here and then reject. So on the 4-hour time frame, you want to be able to see where price action has left us opportunity for a pullback. And that's what we're looking at, that area there. That the market will come over to that area and then reject. So if that will be the situation, it also means that if you want to counter trade, you want to do a counter trading, you can literally sell this market to this level and take your TP and then buy the market to rally up. So at the moment, that decision may not be clear enough, but you want to see that this liquidity is taken before that happens. If they want to go down, they will take out liquidity first and they will smash all the way down here, and then before they rally up. Now on the 1-hour time frame, you can also observe that there is, at this key level that we just observed, there is also a secondary order block. This is a secondary order block at this level, and that zone can be highlighted as well. So this becomes a very strong area that the market may pull down to for a possible push-up. That means the market will drop in there and then rally up. And that's what we're looking forward to. And then we will now begin to target that high, which we discovered here on the 1-hour time frame. So we need to see this. So the first thing is to mark out the liquidity zone at this area. This is a liquidity area here. So I will mark out that area as liquidity area on the 1-hour time frame. I'll mark it out as the liquidity area. There's a reason for that, because if you go to the 15 minutes time frame, you can see it so clear. All right, that's the liquidity area. You can also mark it out on the 15 minutes. It's all good. But that's the liquidity area that I'm looking toward, that the market would take out. So I'm looking at this whole picture. I'm expecting a buy order at this level. So instead of me selling, I will not. I just wait for the market to give me a buy order at this level. This price area here that I've marked from the 4-hour time frame and the 1-hour time frame. So as an intraday trader, understand that your position is to look at 4-hour, 1-hour time frame to understand, number one, momentum, the overall momentum of the market. Number two, you want to be able to understand directional bias. What is the directional bias? In other words, if the overall momentum is bullish, what will be my directional bias at the moment? At the moment, what is the market bias? What is the market saying at the moment? And that's what you find on the 1-hour time frame. So if you go to the 1-hour time frame, it will tell you what the market is saying at the moment. So you can see that the market is obviously in a consolidation. Therefore, it is the bias at the moment is consolidation. That's what you want to look at. So again, is the market bullish on the 4-hour? Yes, the market is bullish on the 4-hour. Then does the 1-hour agree with the 4-hour bullishness? That's what you want to know. If the 1-hour agree with the 4-hour bullishness, then you are ready to trade. So we can see that the 1-hour is bullish as well. The 1-hour is bullish. It breaks structure high, and this high, this is the previous structure low high that was broken. So if we're to do price, what do you call it, order flow, let me just do a little bit of order flow for you. Here is where price is at on the 1-hour, and this high was broken. When that high was taken out, it gave us a new structural high, and this is the swing high that took out the high. And then if you check it, came back to tap into it as a liquidity, but it was still equal high, equal lows and equal high, until there was this news, this release of news that took that price out. So we have a new structural break that took the high out, and then we can see that this is the high. So this became, at that moment, the 1 hour range. Until that high was taken out, there was no structure. So we noticed that the high was not taken out. It was the low that was taken out. So the market breached the low, thereby invalidating this higher high structure on the 1 hour. So what we now have, that the market invalidated it by dropping low here. And even at this point, market created liquidity. So what did it do? We have now a lower high, first lower high, lower low that was created. All of this liquidity structure were taken out. But what happened? The market rallied up. So what the market did was actually to take out liquidity. So the market recognized this area as liquidity and smash all the way down and rally up. So with this rally up, we know that the market is still bullish. This is the liquidity area that was grabbed. So all these zones that you see here, the market took out liquidity with those candles. As you can see, massive drop twice, bam, bam. And then liquidity here will tap into. All of the stop losses here were taken out. Everything here, that's liquidity for you. And then what happens? It was not enough. They recognized that there was still liquidity at this low, this area here. So they have to smash down on this candle. See that? They went down again on this candle. Immediately you see that this candle closed like this, for instance, you know that the market is going to go up because that was liquidity there. Now, are we still bearish? No, we are not. On the 4 hour, we are now bullish again. See this high? This previous order flow high. Okay, I think the music is trying to obstruct some people hearing me. Let me stop it. Is that okay? Should I stop the music then? I thought you guys would love it. Let me stop the music so you can hear me properly. Is that better? Better? Let me know in the chat if that's okay. Me, I like listening to those stuff. Just looking at my chat, I like listening to music. All right. You're all good, yeah? Better? Yes, okay. All right. So here at this level now, what we're looking at is that we want to confirm. Remember, we want to confirm that the 1 hour is bullish as the 4 hour. If the 1 hour is not bullish, I will say don't trade, because 4 hour is bullish, but 1 hour is bearish. Then what trade are you looking for? There's no trade for you. You should not be looking for any trades. You don't need to take any trade anymore, because you have to wait for the market to give you a correlation, a correspondence of what you have on the 4 hour. So that means the 4 hour must agree with the 1 hour, and then you look for entries on the 15 minutes. That's the simple trading strategy. You don't need to make it difficult. So here is the point. We need to see liquidity taken here. Now there's consolidation. We can see that the 4 hour is not bullish. The 1 hour is not bullish again. How did we know? First of all, we see a rally up that took out the previous high. So this is not the current range on the 4 hour. On the daily, on the 1 hour time frame. So this high has been breached. So that means we are not back to higher high. Okay? But the strange thing is that it left us a higher high and a lower low. So that's the structure. It gave us a low and then it gave us a high. The same range. But this range right here was uttered by this structure, this inside bar, which we called the secondary order block. Did you notice this secondary order block? What is secondary order block? It means that first, this is the initial order block. This is the first order block that led to this rally. And then when price came back, it created another retracement, a little bit, but it created a red candle as a sign of retracement, but it failed and then rally up again. So this become a secondary order block. First order block, secondary order block. So here's a trap. They have a trap. So if you were to think of taking a trade, you expect price to come all the way down here. It may not. Price may come here and react because of this secondary order block. And that is possible because they did that based on order flow. So I'm expecting them to do this. The smash down and then rally up. That's what I'm expecting because the market is bullish. Already the 1 hour is bullish, is in agreement with the 4 hour already. Is in agreement with it. And that's what you want to know. That's what you want to see, that the market is agreeing with each other. So the next thing you want is to wait for price action. So how would you not get in? One thing is that you need to understand liquidity. They will not just start pushing up. They will, if they are going to go up, they will take out liquidity. If the market is going to go up like this, you need to look for the liquidity before they go up. So what the market does, let me show you something. What the market does is the market will create a kind of something like this nature. All right. Now let's say price is here and you expect the market to go up. It will not go up until the market take out liquidity and do this. So all of this area would be liquidity zone. And that's what you see here. We see this right now. This is what we see. This is what we see here. But we are expecting this one. We are expecting this rally. So now here becomes our interest. What are they going to do here? We are expecting them to take out this liquidity. This become your liquidity area. Of course, we have liquidity on both sides. We have liquidity at the top. Okay. We have liquidity at the top there. And we also have liquidity at the bottom. So now, because we are looking at buying the market is bullish, we're looking at buying the market, we expect them to take out the liquidity as though they are selling. So they are going to smash down as though they are selling. But we know what they're doing. They want to take out liquidity. So as long as they are taking out liquidity, is okay for us. So what do we look for in that area of liquidity? Sometimes at this rally, you're looking for two things. Number one, which we call price action. Either it's going to be you're using a feed for your entry or you're using order blocks, or you're using fair value gaps. You're using all this stuff just to look for your entry because that's where they will reject from. So the only thing we find now that at this level now, we have another block here. So we have a secondary order block at this level. And we have another order block here. So this is the structure we're looking at right now. Okay, this is what we're looking at right now. This is exactly the structure. So there's a secondary order block here. So they would take out liquidity and smash all the way down and then before they rally up to continue the bullish momentum. This kind of pattern is not always they don't do it all the time like this, but expect it to be a system. Expect it that it will happen most of the time. If you see that the market is creating liquidity like this, consolidation, and it's just moving in one place without doing anything, you have to understand that that is liquidity for you. You take that liquidity area, and then you expect the market to take it out, and you position your entry at this level. Now, another way of doing it is to measure with your fib this swing high that it created before. You measure it, and you see that if it agree with the order block or secondary order block in confluence with 0.61 of your fib, then you have a trade setup. You have a trade setup. And then you can target this high and put your stop loss there. And then you have 1 to 3 risk to reward. This is a setup that you should expect. And this is how you want to be looking at the market. So you go to the 15 minutes and wait for price action to notify that this is where it goes. So you want to target that previous high. So that will be your minus 27. At this level now, that's it. This becomes your trade setup. This is how you look at the market in most ways, because you have to do your top-down analysis. Remember that. Do anybody have a question? Do you understand what I'm doing, what I just explained? That's exactly what we see here. If you go to the 1 hour time frame. Now, your 15 minutes time frame is your entry time frame. Is your entry time frame. Is your entry time frame. So where you normally would do your analysis as an intraday trader is your 4 hour and possibly look at the daily, 4 hour and the 1 hour. Once you'll be able to find your market overall momentum and the directional bias using your trading system, then you can now go to your 15 minutes time frame and look for an entry. And you can also enter the trade on the 1 hour. It depends on you. Or you can enter the trade on 30 minutes time frame. It depends on you. But as long as you're able to sketch out this area of price action, and you want to be able to know what the market is doing at that area, to know, okay, this is what I'm expecting. This what I just designed here is called a system. You got to have a system. You got to have a system. You also have a bearish pattern of this kind of system. First, you look for a momentum. And if there is a momentum in the market, then you want to look at, okay, what is the directional bias? And the market is showing consolidation. Then take that place as your liquidity. If the market is bullish, don't just try and buy. Look for where the market takes our liquidity, and then you join the trade. And that's what we've done here. Okay, I hope that's clear. So let me take that out, and then we'll go to the chart again. Any question? All right. Now, you may say, well, they may not come down, but you can't just jump into the trade and start buying. No. That's the reason you have to be wise to know what the market is doing. It's consolidating. You can't just say, let's buy now because it's pushing up. That's crazy. That's just gambling. Wait, have a system. Have something that works. Look for something that the market is doing and wait. Another example is, for instance, I told you this is the range. All right. I can use my gun box. Let me remove some of this drawing stuff. All right. I can use my gun box right here. I know the market is bullish on the 4 hour. So I know the market is also bullish on the 1 hour, but I need to know the current market range, the range, price range on the 1 hour time frame. So this is the price range, but I need to know when to buy. So if I'm going to buy, I have to use a gang box within the current range. And then with that gang box, it would tell me the area of interest. So as long as price is in this area, I'm not buying because this is premium. I need the price to come to the area of discount, at least somewhere in this area, before I buy. In at least. If the price took out the first line and just tap into this area, I'll be looking for buys. But as long as the price is in this area, I will not be buying anything because that is a sell zone. As you can see, there's a multiple reaction already. So the market could drop there. So if I'm going to buy, I will wait for price to come to discount zone for me to take a trade. And that is another way of looking at it. It's okay. I'll wait. I'll just wait. Let's price drop. And if price drop, take out liquidity, confirming that yes, the market is now ready to, you're ready to take the trade. And also, if you use your fib, you will notice that from that swing high to that swing low, you see exactly where 61 is. Did you notice 0.61 is in the buy zone? It's in the zone called discount. That's the area you want to wait for price to come in. And that will clarify a lot of things. But what if price rejects at the secondary order block? That's fine. It's okay. But you need to understand that if you want to trade that, then trade it. But be careful. It's just a simple idea because that will be like price rejecting at 38. But this is the 50% level. So if price rejects at 50% level, then get in. So the question is, how would you not get in? Because a proper retracement, there's no genuine retracement right now. A proper retracement of this impulsive move that you see that give us a new higher high on the 1 hour will be 38. If price tap into 38, then we have a reasonable retracement. And if that hasn't happened, you can't just enter a trade and trade it. You have to wait for a reasonable retracement. So at the moment, there's no retracement. We need to wait for that. But we can see all this system coming together where we have liquidity in the area. We're expecting price to take out that liquidity so we can join the journey to buy from the secondary order blocks. And then we can see that, okay, price is also playing around between the premier area, which is not the area we need to be buying from because price is too high to buy from premium. Is the premium price is too high. We can't be buying there. It's too high. So we need price to be discounted to continue the buy. So that's another way you see it. It's okay. I'm going to wait for price to be discounted to continue the buy. So what's price doing? It's consolidating. I will wait. So on GU right now, there is no trade. You got to wait for your setups. And these are the different ways you look at the market to wait for your setup. Depending, I'm just giving you an idea of how I see the market. So you know what you trade, you know how you look at the market. Okay, but this is my way of just looking at the market and saying, you know what? Okay, I can see what the market wants to do. I can see it. But I want the market to come to that area to agree with what I'm going to do next. So I'm expecting price to come to this area since we take this range as a new range on the 1 hour time frame, agreeing that is bullish by breaking out the previous range. Therefore, we're going to wait for setup. Price should come to this area. Now, you might as well say, well, if I sell this market to this place, that would be about 50 pips or 40 pips. Can I trade it? Of course. It's called counter trade, but it's not advisable. It's not advisable as a trained trader. I'm a trained trader. There are those who trade reversal. They trade reverse strategy. Okay. They like to trade reverse strategy. I did trade reverse strategy before. And reverse strategy means that you wait for price to get to a support and it drop, and then you wait for price to push up to get to a resistance and it stops there, and then you want to sell and then the price drop to support again. That's reversal. But not all the time price give you those opportunities. Sometimes it may not come to where you expect it to come to, and then price start rallying up. But if you are a trained trader, you know that it's important to know what the market is doing, the direction at which the market is going, and wait for price to give you a confirmation to trade in accordance with the trend. So if you were to look at trading reversal pattern or reversal strategy, then you have to look at the pattern here. Is it giving you a reversal pattern, or is it a reversal candlestick? Are you looking for trading the candlestick, reversal candlestick, or patterns? So you have to choose which one. But I don't trade reversal candlesticks. I don't trade reversal patterns. All I know is that I have a system that follows a trend. So I look for that and I trade that and they give me my TP. So that's as simple as that. So all I'm waiting for now on this setup is very simple. I'm waiting for price to retrace and come to this area. And come to this area where I can long and then target minus 27 here. So all of this place will be liquidity that I'm expecting that the market is going to take out. So this will be my setup. Again, it is not compulsory that the market should obey me. Remember that. It is a probability setup. So it may do it, it may not. I'm not saying that this is what the market must do. There's nobody that is 100% accurate with the market settings. So you need to know that. But we are all actually analyzing the market based on historical data. So, and this is what is going on here. Don't jump into the trade right now until and unless price push up to break this high. Once this high is pushed up and broken, then all you need to wait for is a pullback, because it will still pull back. This liquidity area must be tapped into before they'll go up. So that is my take on GU. Any question on that? Now, Euro USD, the same thing. They are behaving the same. So I'm expecting the same thing. There's going to be a push up, a rally up. But the problem with Euro USD is that it's still bearish. Euro USD is bearish on the 1 hour time frame and is bearish on the 4 hour time frame. And for that reason, we got to be careful in trying to buy Euro USD or try to even sell it, because Euro USD at the moment, we might eventually just, consolidate. As you can see, created consolidation phase here. This is now consolidation, because this is the recent high, recent low. All right, this is a zone. So we want this high to be taken out, or this low to be taken out, for the market to give us a proper bias. At the moment, it's bearish and it's also strongly bullish. So the question is, what is the market trying to do? Well, the reason why I say it's bearish because of structure, but it's still bullish. Let me explain that. It's still bullish. The reason why I say it's bearish because of structure, but it's still bullish. Now, if you look all the way back, if we're to do all that flow here, price rally up from here, as you can see. Sorry about that. Let me change my tool. You notice that price from here, okay, pushed up and then came back down. So what happened? This high was breached. So we have a new push up. You see that? So when price pushed up, and then we have this range become our new range until price broke above. Now, remember what I was telling you just now. Very simple trading system. If I was to use the gun box here on this rate, let's say I was looking for trade and I want to buy the market, I can see it's bullish. All right, I want to buy the market. If I put the gun box there, you'll notice something. When did the price started pushing up? At premium, at discount. Price came all the way down to discount and then went up. Now, if I should put my fib there, from there to that area, beautiful, beautiful intersection, beautiful setup. And then it rallied. So that agree with that. So just a minute. So you can see that the price went bullish from here by breaking this high, and then we got this new range. So we are bullish in a way. So what has happened now? The market has moved. If I were to put my gang bus here, just to be sure that it went to discount before it went up. Beautiful. Price came to discount before it rallied up. So if I was to look at for trade at this area, I will be looking for liquidity grab before I will buy. So that's why I say it's stylishly bearish, but bullish. The market is still looking bullish, but it wants to act as though it's bearish. So if you don't have a way of looking at the market using order flow, you'll be a victim of trying to say, oh, the market is selling, let's sell. And then you do this, you notice that, price has already broken the trend line. Why is it going up? But it's creating, you're thinking, in your mind, you're thinking this is structure, all right? And you will say price is creating lower. You'll be thinking that's what the market want to do. But in reality, what you're not looking at is that this is a retracement. This is the rally. This is a retracement, and it wants to continue up. So with that in place, we now know that bullish, this pair, EURUSD, we eventually turn bullish, not bearish. As long as price, okay, as long as price is showing us that that's what will be. So what I'm looking for now is at this range, what I'm looking for now is that price is already going up. I want price to pull back. So I want price to pull back into at least the area we're looking for, a little pullback. A little pullback into an area that of interest. That means liquidity must be taken. So what will I do? I will take this trade because I'm a day trader. I know that the market is bullish. I will take this zone and I will expect price to pull back into this area before I will continue to the upside. So this would be my way of looking at EURUSD. You see the difference. The way I looked at EURUSD because of the market, the way the market looks, the way I see the market on EURUSD is different from the way I just analyzed the GDP USD. Because you have to analyze based on what you see. What's the market telling you? Don't try to read your idea into the market. No, understand what the market is telling you. So at the moment, I'm looking at this market will come back to this area and I'll look for entry. So this is also a liquidity area. So what I'll do is I'll go to the 1 hour time frame and I will look at it properly. That's okay, fine. I have my liquidity area here. Okay. And I'll put it there. That's my liquidity area. So I'm expecting price to take out that liquidity. Okay. And I'll take out, that's the consolidation there. I'll take out that box. I'll expect price to take out that liquidity area just to make my chart look clean. Then And again, this is the area of remember, this is discount area. So it may not get to 50, 60, 61. It may reject at 50, but I know that there's liquidity grab already. So I will be expecting when it drops, I will be seeing candle. How many candle? I'll be seeing red candle, red candle, red candle, red candle. And once I see green candle coming in, that's my entry candle. On that green candle, that is my entry candle. Otherwise, I'll be missing it because it's a common ideology, common structure. Let's say price is creating a low, okay? Impulsive low. It's coming down, impulsive low. Every candle is building on, closing on bearish, bearish, bearish. And then you notice bullish. What has market done? Creating a structure. So it might come back again and create another one and reject. But at this moment, this bullish move is already telling you that the market is planning to retrace back up. So that will be your entry call. The market may create another liquidity after that and then take it out before rallying up. It could do that. But you know that that was your entry call. And you have to be ready to take the action. Anytime, any day. All right. Is bank holiday. All right. The market may not move the way you expect, especially in the British pounds and USD. So all you need to do is wait for the opportunity. Now, this is what I see there. I'm waiting for price to come down here and I will take my entry. So on the 1 hour time frame, what am I waiting for? So I also want to observe price action to the left. I also want to observe this area here to the left. So price may come there and reject. It may not get to 61. If it gets to 61, there is a secondary order block here as well. So this area becomes my area of interest, where I will be looking for entry. That becomes my area of interest where I'll be looking for entry. You see? So for that reason, I will wait for price to come there. It's a bullish market. I'm not going to sell it. I'm going to buy. Again, bullish. Target that high. Put your stop loss there. And this will give you a minimum of 1 to 2. All right? Which is great. And you can get that beautiful trade out there. Now, having done this, what is the fundamental approach to this? What is the fundamental analysis to this? What's the market looking at fundamentally? Because we are looking at technical now. Let's look at fundamentals. Now, I use a tool here, which is called Edge Finder. It's about 1,000 plus to get one. A pro. The pro one is about 1,000 plus. At $1,000 something to get a tool. It's just for fundamentals. It doesn't teach you technicals. It's just fundamentals. That means if you want to understand how to read the economy, understand, because it is not only technical that move the market. You got to understand it's not only technical. Fundamentals, you have to consider fundamental analysis, technical analysis, and also sentimental analysis. A professional trader should be able to understand these 3 categories of analysis to be able to make the right decision. So we just estimated 3, we look at GDP USD and Euro USD. So according to the radar of top setups based on number 1, the COT data, number 2, the retail position of the market, retailers, what are they doing? Then number 3, positioning based on seasonality. That means in the past 10 years, in the past 5 years, what has the market done in corresponding to what it's doing now? Is there similarity? That means historical data. Then we're looking at trend. What is a trend? Trend is agreeing with the market. That means bullish. What is the GDP? That means gross domestic product of these currencies. Does it come together to add to the value of the market going up? Then we have the PMI. We have the minor PMI and the secondary PMI. We have the retail sales, retail sales based on the rates. Okay, we have inflation rate, we have unemployment change and unemployment rate, we have interest rate. These are all variables of fundamental reports, economic reports that move currencies in different nations. So not to have this idea backing your analysis as a technical trader is to be actually deceived that you are a professional trader and you don't have this information. So we have EURUSD is very bullish, GDP USD is very bullish. So that agree with our technical analysis. You see, now we can see that fundamental is favoring our technical, which is beautiful. This is what you want to see. Now we can see gold is becoming very bullish now, and we have Euro JPY is bullish. So these are the pairs that is pushing up right now. What about the bearish market? Well, there are few ones that are bearish, but they are not strongly bearish. So I will not take that. I need very bullish and very bearish. So those are the pairs I will look at and then look at my position in them. So let's look at one of the pairs, one after the other. Okay, looking at the sentimental, what do you call it? Looking at the detailed analysis of this pair. So we'll take the first one, which is EURUSD. So this is EURUSD. These are the detail. It's very bullish. So we have the COT data here. Now the COT data tells us that on euro, we have 56% against 43. These are the big guys. These are the big guys, okay? They are the ones dealing on these things. These big guys we're talking about the commercial industries. We're talking about the banks and all of these guys. They are putting the money in. So, but it's not a good, COT data that I want to see. Okay, that's number one. Number two, we see that USD also is bearing up, is comparing. So both Euro USD, we have people pushing money in Euro and people buying USD as well. So that means there may bound to be consolidation in the market, indecision, because we can see that they are sharing the same, the currencies are sharing almost the same. You will not understand this except I teach you how to use this too. But nevertheless, but these are the things you look for, and then you understand it. Now, on retail sentiment, this is the reason why we're buying. Retail sentiment tells us that the retailers are shorting the market. That means every other people apart from the big guys, they want to sell the market. So majority of the people wants to sell the market. And we know that in the forex trading industry, majority of the people are wrong. Because majority of the retail traders are gamblers. They are spectators. They just think that this is where the market goes. Many of them don't back their decision up with facts and historical data. They are too lazy to go into all of that. So they just follow the crowd. So somebody will look at this now, the market is shorting, I'm going to short, and then they join. So it increases the number. So if you say the market is selling and yet the market is pushing up on your chart, what does that mean to you? You see what I mean? Let me explain this by going to the sentimental analysis. So already you can see the detail of everything here. Okay, you can see the inflation data, interest rate data, everything is coming up here. Now let me go to sentimental analysis so that you can see what I mean. First, let's look at the COT data regarding this pair. Now we see the COT data, that means the big guys position in the market. Gold is bullish. So in an attempt to sell gold, you're wasting time. Just keep buying gold. Oil is bullish. You got to keep buying oil. US steady is bullish. You got to keep it. Big guys are putting money in there. So But that's not even what I want to show you. But look at EURUSD against, these are the big guys' position. This has nothing to do with retail. These are commercial market. This is what the big guys are doing. So some of the big guys are selling this market at 43%. While others are selling it, are buying it at 56%, which is huge. So I will not look at that as what on now look at USD. USD is almost equal. So that's where the issue is. Any pair that have British pounds and USD together, obviously like we have now, or Euro USD or like we have now, then you're going to be struggling to really make the trade happen. And that's why you see most of the time I move to other pairs to look at them, because Euro USD and GDP USD, the way they trade, they are very, very interesting. So what you want to do is now look at other things. What is other things? You want to look at first the position of each of them, like British pounds. What is going on here? We can see that on the British pounds, 50% is long, 49% is short, which is like equal. For me, the little change we've seen that price has moved up 8%, which is good. It means that if you check their short position contract and their long position contract, you will observe that 68 against 68,000 against 67,000, which is very minimal difference. So the only net difference we see there is 1,053 as a net difference to favor the bullish market. So it favors the bullish market, but it's not a huge difference. So that in turn is what I need. So I will now go to the sentimental analysis of that pair. That means the retail position sentimentally. What are the psychology of these retail traders? So I will look for that pair, which is British pounds USD. So I can see that on the COD data, 1,053 contracts is what added to push price up. So it will favor bullish move. Then I will come to the sentiment. I will now see that this is the position where the big guys are taking. They are taking the buy position. So this favor. So everything here is telling me that I should not sell. All of this one that is telling 60, I'm not selling any of this trade, any of this pair. I have to buy them. I have to buy every of this pair. Now, another tool I will use to confirm this is called the what do you call it? Forex. Or you just Google. Very simple. You go to Google. I want to show you another simple way of doing it. Go to Google and say retail sentiment. Or you can say Forex pair sentiment. All right, you just type it like that. You want to see what they are sentiment are, and you can use this one, my Forex first. We want to use that. Let's see if that one has something that we're looking for. Good. So you can use that. Now look at Euro USD. What do you see? If you click on it, it tells us that long position is 18%. Short position is 82%. I already told you that the market is, the higher the percentage is the majority. So you have to get out of there. Don't try to sell when don't try to sell the market just because it's 82%. No, it's telling that the big guys are going to come in. So another one is this one, GDP USD. You see 12%. So it's in agreement with what we find on this level here, where we have 29%, which also agree, although that one is 12%, it doesn't matter the figure. Actually, it matters the figure based on the difference. So here's the range. You want to look at 40 to 60. So 40 to 60. And for instance, if the majority of people are selling 60% of the time, then 40% is the group you want to join to sell or buy. Now, I know this is confusing. Don't worry about it. With time, if you stay long enough with us, subscribe to the channel if you're watching. you will be able to, because I'll be explaining these things to you over and over again. You'll be able to get it. Okay, now, lastly, before I round up this section, now I know that everything is working in consonant, in agreement with what I want. So I have Euro USD is bullish, and SP 500 is bullish, and GDP USD is bullish. So if you check my analysis yesterday, you observe that I told you that I'm looking for that momentum on bullish price. So SP 500 is also bullish. But at the moment, I want to go to the 4-hour to show you something. SP 500 is bullish, but we can see that the market range has begun to turn bearish on SP 500. So I will have to be careful on SP 500 because the chart did not agree with what the fundamental is saying. So at the moment, yes, it looks bullish, but the market is beginning to pull back down. It's bullish, all right, but we can see that structurally this liquidity has been taken. So, and we can notice that based on what do you call it, order flow, which is this high here, you will notice that price just breached that high by taking out that high. So this is now what we see. So what move took out that high? Let me remove this. This is US SP 500. What move took out that high? This move. So we can see that the recent structure here is this high. He went that high before coming down. So now we have a break. So here now is our new structure, a lower high. So this is now where we are. So this is now the range on the 4-hour that I'm looking at. So if I put my gambus here to check the premium, am I supposed to be buying or selling? So the first thing, we have the first lower low. We need a second lower low to confirm that this market is going to go down anyways. So on SP 500, I have to pause. I'm not going to decide yet because it's bearish based on structure and market analysis, based on technical analysis. Is not agreeing with what I want to see that the fundamental is telling me. So for that reason, I'm not going to trade SP 500 at the moment. So I will need to wait. So if I find that they drop again by taking out this low, then I'm ready to sell. I'll wait for pullback. Then that's when I will start selling the market. Otherwise, everything I do here is just I'm risking more. I'm risking more. It's not enough to just use just one lower low to make your decision. It's not enough. On the 4-hour time frame, we need a confirmation of at least 2 lower lows to confirm that the market is shifting bias now from being bullish for a long time. You see, being bullish for a long time. For instance, look at when market shifted to bullish. What did it do? It was selling for a long time, okay? And then it went bullish after a while. So what do you notice? Very simple. This is, you can see liquidity here, market order flow, and then you see a break there as well. And then it dropped again, creating more lower lows. So you'll be looking for sales in all of this until, you see, until that high was broken, this high. So the first higher high was this one. So what happened? The market came back down and take out liquidity. Like I said, just because we have one lower high is not enough. So we see this, that the market rally up and they came back down and tap into the zone and it took out liquidity. How did we know? The next candle closed as engulfing. It engulfed the previous one strongly and closed above. So it shows that this first higher high is confirmed. Now we need a second one. So this becomes the second higher high, this range. So when we now have this second higher high, then we are ready to trade. All of these are consolidation phase. So this is the structure. So now it's okay, the market is bullish. We'll be looking for buys. Now look at what they did, what I've been teaching you. They created liquidity and they took it out. This is 4-hour liquidity grab, this candle here. And immediately they took out liquidity. What did they do? They rally up. So where did you now find the bullish? This is bullish candle. After all this bearish, you see the bullish. So if I was to trade this as a system, for instance, I already confirmed that it's a buy market. If I was to trade this, I would just put my entry on the next candle. I'm buying and I'll put my stop loss at this low. You have a system and you target what? Again, you need to know where you're targeting. You can't just say, I'm targeting it. No, you got to have a target. You don't just, you may say 1 to 2 is fine, but how would you know? So the first thing you do is to target the previous high that the price dropped from. That becomes your first TP. Just a simple strategy. And then that's it. This is just 4-hour time frame alone. And you got that trade up. And then you wait for the next pullback, and then it might not happen that day, but guess what? Price pushed higher again. You look for liquidity grab, and then you just keep continuing until now we're having this. So we have the first structural low. Now, this might be liquidity grab as well. It might be liquidity grab as we have it here. Okay? This might be liquidity grab on the 4-hour. And you might jump in here and say, okay, if you were watching this, you would have the same thing I did here. You would have done the same thing here. If you jump in there, you say, well, I think the market is going up. I jump in after the green candle print. And then you put your stop loss right a little bit at that low. And then you target the next high again. That gives you 1 to 2. So this will not be the trade that you're on. Remember, this is a number of days now. So that means on the 23rd, that's when this market opened up. So 23rd would be on Thursday last week. So you'd have been on this trade, and then you're waiting probably before the end of this week, price will hit TP. This is swing trade. You are looking at 4-hour. You're swinging it. It's not daily. But on the daily, it's not like you're trading it as a day trader. But as a day trader, you want to go to a lower time frame to look at opportunities to join this push up that is happening now. So if it's going to happen like that, fine. This can be liquidity and then it rally up. How would you know? Until it breaks this high, you would not know. So that's why it's consolidating now. A lot of people are thinking it's going to go up. So they're taking out liquidity. They're waiting for liquidity grab. So what I would do on the 1-hour time frame is to look at the liquidity area and see what it does. So I have a liquidity area here. Since I'm looking at this range on the 4-hour, on the 1-hour time frame, or the 4-hour time frame, I'm looking at this area here. What is it doing? I have liquidity too. And yet it's telling me that it's a bullish market, but it created a bearish structure. So I'll create my liquidity zone. So this is where I'm looking at. Until price break, take out the low, I'm not buying. So I need to wait for price to take out the low. So if I put my ground box right in there, and I put my discount, I notice, you see, it's struggling within the equilibrium. This is an equilibrium area. So it's struggling there. So I need price to push lower. So if it does push lower by taking liquidity out, then I'm going in. I'll buy. That is what I'm looking at. But at the moment, this extended drop is my concern because it took out liquidity massively and then it struggled to just push up. So now what is it doing? I want to see what it's doing here because this is a very sensible area that I should look for opportunity to trade. I hope you guys have learned something today. I'm done. Any question, any comments, anything, any concern? You know, some people have a very short attention span. people don't like, they don't like education a lot again. You see, people are so I don't know. They don't like, they want quick fix. Quick fix. Show me the holy grail. What strategy? Yes, do it now. And then they'll just trade it and make money now. Shame. It's a shame. It's called shambo. That's not how it works. You gotta put in the time and effort to learn. Put in the time and effort to learn. Put in the time and effort to learn. All right, study the chart. Okay. Please explain the secondary order block and fair value gap again. Well, I don't trade them. I just use them as a term. It's the market. You, as a trader, you need to understand them. All right. It's not something that I trade. It's not in my trading system. I don't have it in my trading system. But as a trader, I know what they are. I know what they do. I can see them. I know that price will react to those areas. So, okay, look at this pair. The primary order block is this area. That's the primary order block. And that's what a lot of people, most people trade. So they'll wait for price to come up there and drop. Now, fair value gap is this. Between that low and this area. You see that last push up, the low of it, and to this where it consolidated and push up and stop. That is fair value. This becomes a fair value gap area. So that means this will be an area that they will expect price to reject and sell. That's what it means. So why? Because this was the primary order block, and also it left us with imbalance that led to a gap, a fair value gap. This is now the fair value gap area here. So what they expect as those who trade this kind of system is that price will come back here, this area, whatever area is, they are expecting multiple candle rejection. They should expect maybe 1 or 2 candle rejection before they get in. So they will put their entry somewhere there like short, maybe somewhere around here, and they will wait for entry on the lower time frame to get in, to have a reasonable risk to reward. Some of them will put their stop loss at that level. Some of them will want to get in somewhere in there, depending, because this is a fair value gap area. Price may play around there and reject, depending on the behavior of the candle. But that's the area they're looking to sell, and they will target this recent low. That's the way they see it. But it depending on the behavior of the market and the directional bias. So this is a secondary order block as well. So I can decide to say this order block here from the body to the body becomes my secondary order block. And that's why you see that price is rejecting at that level right now. But the strongest one is the primary order block, or the fair value gap that the primary order block created. I hope you understand that. So this area now becomes an interest area where I'm looking that price will drop. That's how they trade it, if the market is bearish. But at the moment, SP 500 is not bearish, it's a bullish market, but it has one lower low structure on the chart, on the 4-hour, that is making me to say, well, I think the market doesn't want to buy yet. So I need to wait for it to give me a sign that is going to go up. That means come down and reject and go up. And once you start going up, I'll get in. So I will see a liquidity taking. That's what I'm looking for. I want to see liquidity grab. I'm not going to guess. I just want to see it happen. If they take out the liquidity low, then I'm going to look for entry. So as far as that is concerned, I'm looking for a liquidity grab at this level to find my entry to buy. But again, it may not go up. So if it drops, I want this low to be taken. If it sells, I'm not going to sell until this low is taken out. Once this low is taken out, then I'm ready to sell. That will give me a second lower low. Then I know that the market have shifted from bullish to bearish. But at the moment, it is no-go area. All right, that's it, guys. I hope you got it. Any other question? Any other comments? That's how we roll. Any question? Any contribution? Yes, on the YouTube. Thank you so much. Yes, for those of you in the YouTube, hit the subscribe button, hit the like button. Listen, share this video, share it, because we want to help ourselves. This is how you learn how to trade, man. If you want to do mentorship, one-on-one mentorship, easy, that one is okay. But you can really learn from this kind of content. And you just need to put in more work. You put in more work and you'll be all right. But don't despise or don't undermine the power of mentorship. Trust me. It goes a long way to put you in the right place. It accelerates your progress, okay? So I'm gonna put in an alert here just to let me know when the liquidity is taken. And also on this one as well, I need to put an alert to know when the liquidity is taken. I'm not gonna buy from there because it's not a nice area to buy. Then on British pounds, the same thing. I need to create a liquidity here. And then wait for price to do that. If it push higher, I'm not going to trade it. I need a pullback. So whatever it's doing now is none of my business. The market is not ready for me. Any question? Any comments? All right. Thanks. All right, guys. Thank you so much. And I will see you in the next one. For those of you who wants to join the trading lab, the link is in the description of this video. If it's not there yet, I will post it as soon as possible. But check out the link on the description of this video to learn how to join the trading lab, where I send daily analysis, where you can learn a lot of things, and also join my weekly sections that I talk about trades. Okay. If you have any concern, any question, let me know before we cut it off. All right, everyone says thank you. You're welcome, and I will see you guys on the next one. Hopefully, for those of you in the mentorship class, I'll see you on Wednesday. All right. If you have questions, don't hesitate to ask. Do not hesitate to ask. Yeah, that's it. All right, guys, thank you so much. That's it. And I'll see you on the next one.